We're coming to the end of the comment period for NCUA's Field of Membership proposal. The response from credit unions has been really strong. We've seen thousands of comment letters go into the agency. There's a backlog of comment letters that are waiting to be posted. So we're really pleased with the response that we've gotten so far. And we know that over the next several days, maybe even weeks, it's going to take NCUA a little bit of time to post those comments. We sent our comment letter up last week, and we fully support the proposal, and in fact we even found some ways that we thought NCUA could go a bit further under the law to expand consumer and small business access to credit unions. One example that we encourage them to do is on their population caps, to not include in those caps populations that are in underserved areas, so that it encourages credit unions to reach out to those areas that might have underserved or underbanked consumers and to serve them. So we're real excited about the proposal, very pleased with the response we've seen from credit unions. There has been some banker opposition to the proposal. We knew that was going to happen, but overall the voice that credit unions have sent to NCUA has been quite strong. When we talk to credit unions, one of the things that we hear a lot about is their concerns about examination fairness and examination frequency. And we've been working in Congress for the last several years to move an examination fairness bill that gives independent appeals process and an independent ombudsman to bring concerns about the exam process. Now we're working very closely with NCUA to try to expand the exam frequency. So prior to the financial crisis, there was about an 18-month exam cycle for most credit unions. And after the financial crisis, NCUA narrowed that to a 12-month exam cycle. We think that the time has come for the exams to be a little bit less frequent. And with the implementation of new technology, the rollout of some new proposals, we think that there's a very good chance that NCUA can get to a less frequent exam cycle. We've been pushing them on that. And just last week, Paul Gentile, the chairman of CUNA's Examination and Supervision Subcommittee, several CUNA staff met with NCUA to press this issue even further. We think they're headed in that direction. It's probably not going to happen as quickly as any of us would like, but we're going to continue to press NCUA to expand that exam cycle, and we're going to continue to meet with them. In fact, Larry Fazio is going to meet with the full Examination and Supervision Subcommittee at the upcoming GAC. So the House and the Senate are back in session. The House is going to consider legislation dealing with the federal debt. There's also a nutrition bill on the floor. And the Senate's going to continue its consideration of the energy bill. As usual, we're following a number of hearings on both sides of the Capitol. A couple of key highlights. This is the week for what we used to call the Humphrey Hawkins hearings. It's the week when the chairman of the Federal Reserve testifies before the Financial Services Committee in the House and the Senate Banking Committee. So Chairman Yellen will be on the Hill on Wednesday before the House Financial Services Committee, and on Thursday she'll deliver what's likely to be substantially similar testimony before the Senate Banking Committee. The other hearing that we're following is going to be in the House Financial Services Committee on Thursday. It'll be in the Subcommittee on Financial Institutions, and it has to do with payday lending. The committee is going to hear from a number of witnesses, including representatives from the payday lending industry and the CFPB. And the focus on the hearing is sort of a precursor to what we expect to be a proposal from the CFPB, perhaps as soon as next month. We've been following this issue very closely. We had a number of meetings with the Bureau in recent months, encouraging them to make sure whatever they do on payday doesn't adversely affect the way credit unions are offering the product to their members. We know there's great demand for this, and that credit unions can be a very positive alternative to the for-profit payday space. So we're encouraging the CFPB to do no harm with respect to how credit unions offer payday products. We're real pleased to announce that we have a new member of our advocacy team here at CUNA. Eli Joseph joins CUNA today as Deputy Chief Advocacy Officer for Congressional Relations. And in that capacity, he's going to help lead our efforts on Capitol Hill. Eli comes to us from Merck, which is a little drug company, and from the Bio Trade Association as well. He's got experience working with the Democratic Senatorial Campaign Committee and also in the White House Office of Legislative Affairs under the Clinton administration. He's got an MBA from the University of North Carolina at Chapel Hill and a political science and international relations degree from George Washington University. He's going to be a fantastic addition to what is already a very strong advocacy team, and we're excited for him to get started and get to the Hill.